Alright, the name of this video, I'm going to say, what has worked in investing? Why am I so confident that my strategy works? Well, where's my mouse at? There were 40 studies of investment approaches and characteristics associated with exceptional returns. But yeah, 44 studies. And this was from all over the world that they did this. It wasn't just in the U.S. Me personally, I I like U.S. companies, but they were so expensive that, and again, I like to find ugly, obscure, hated, and usually stocks in other countries are cheaper. So, I have, of course, invested in American companies, but, if Walmart's trading at 32 times earnings, I don't want to wait 32 years to get my money back. Low price to asset value, low price in relation to earnings, a significant pattern of purchases by one or more insiders, officers, and directors, CEOs, chief financial officers, etc., a significant decline in the stock's price, small market capitalization, goes on and on and on and on. This one study right here is crazy. 29, almost 30% return for a 13-year period. $1 million turns into $25 million. That's pretty good. Sign me up for that. In this study, they got a 14% return. $1 turned into $12.80 from 66 to 84. And just by the way, I think most money managers, cycle their portfolios at the end of the year. Here's another one, the lowest price to book value. Some pretty good returns. Here's one where the S&P would have got you 9%, but the average return after 1 year was 28%, and the average return after 2 years was 53%. They're adding the 2 years together, not averaging 50% a year. And then after 3 years, the return was 87%. not far from 100% doubling your money in less than 3 years. That's not bad. But here's the proof, guys. These are studies, 44 studies from all over the world. When you're buying that high book value, book value of 1 basically means is that fair value. If it's less than 1, that means it's and I've found companies, like I said, that the market cap would be $30 million, for example, and they have $30 million in cash, and they're profitable, and that means the business is selling for zero. I mean, it sounds crazy, but the reason why it's crazy is you got people quitting their jobs and buying tulip bulbs for $40,000. You got people buying Tesla that when it would take 1,000 years, to get your money back, and in the pandemic, that's what the PE was. It was 1,000. It would take 1,000 years to get your money back, and yeah, the price went up. Who cares? That, to me, that doesn't mean anything. You got lucky on the lottery ticket. I still think it's worth zero, but same thing with Bitcoin, Dogecoin. You got a coin somewhere in the sky. I got a cousin with a bunch of Bitcoin. Don't even remember how to get it, because he got it so long ago. Doesn't remember the password or anything. Like Bruce Greenwald said, if all the money is going into the Cinderella stories, the get rich quick, the lottery tickets. I mean, I knew things were bad when I was at work, and the janitor starts talking about buying Dogecoin and stuff. That's when alarm bells should start ringing in your head. Maybe it's time to sell. Maybe it's time to short wherever the craziness is. But human nature has not changed. Like people operate on fear and greed. And Bitcoin started out less than $1, and then it goes to $60,000. And then you got people on TV, these idiots that start saying it's going to $1 million. Gold, since the time of before Christ, gold has always been $1,300 an ounce. Except for the times where the government would maybe manipulate it, or silver, where they artificially change the price or whatever. But I believe, in my opinion, this ain't financial advice, is my opinion, gold's $1,300 an ounce. So when it's $1,100, it's cheap. You can buy it, make $200 profit. When it's $2,000, it's expensive. But yet you got people on TV. It's going to $10,000. It's going to $20,000. It doesn't produce anything. As like Buffett likes to say, if you buy a farm, it produces something. You get I don't know, 50 bushels of corn or 100 bushels of corn, or how many cattle or whatever you're growing. But gold just kind of sits there and don't really do nothing. You can look at it, but it doesn't earn anything. I mean, the only caveat I'd say to that is, why do you own silver? Well, I own a silver covered call ETF, but that's because they sell covered calls, and so it actually does earn something. But gold in general, you can sit in the corner and you can put all the gold in the world and probably a little small room and look at it and sit on it. But like Buffett would say, he would rather own 3 or 4 great businesses than that, because a great business is going to give you a return. But here's just the proof, guys. 44 studies from around the world. Good times, bad times, up times, down times. I mean, it works. And the news likes to talk about growth versus value, and like I said, they've created this whole industry that is basically worthless. They add zero value to the average hardworking American investor. If you just would have stuck your money in the S&P 500, you got 10%. And by using someone that is not competent or has no clue about what's cheap and what's expensive, they get a little pitiful 7% return if they're lucky. The average person's probably got somewhere around 3, so somewhere around 3 to 7. And when you go into most of these places, they just hand you a booklet and pick 2 from this sector, and pick 1 from that sector, because we got to have equal diversification, and and then they never tell you, is it cheap or is it expensive. Like Warren Buffett's come to Berkshire Hathaway. I remember a couple of years ago when the pandemic hit, it was around $200, under $200. I want to say it was around $170, and that was cheap to me. But there was other companies that I thought were a better deal, and I decided to go with that. But now they're probably $350 a share, $350 a share for the B shares. The A shares are of course like $500,000 a piece or something, but I'm talking about the B shares, BRK .B. But under $200 to me is a bargain for Berkshire Hathaway. I mean, you basically getting the little pieces of the companies they own. I mean, you're basically, and they have like a ton of cash too. Anyway, thank you.